Welcome to A Scrap Life, a podcast solely focused on the hustlers, grinders, operators, and business owners who live and breathe the scrap metal industry every day. Here is your host, Brett Eckhart.
All right, here we go. March 2026. I can't believe it's already here. I got my friend Aldo Jordan once again to break down the copper market. What happened in the month of February and what he anticipates to happen in March, and then we'll come back in April and tell you whether you were wrong or you were right. What's going on, man?
Oh, we're gonna start keeping track now. Then I better.
If I was
start.
smart enough, I'd get like charts and do all that bullshit, but I'm not. So you know how it goes.
Oh my goodness.
So how's life? How's everything going? Was copper treating you right, or is it making you grow gray hair? Because your hair still looks pretty
It's
black.
giving me a lot of gray hair. How is that?
Is you can't tell from the video, so I wear a hat, or else you can see all my gray hair.
That's that. We did that on purpose, brother. No, it's it's very hard lately to decipher between all these news from all this front about really what the net impact is being on copper, and trying to decipher what the fundamentals are between buying and selling, consumer demand. um, the equity markets hasn't helped. The roundup on precious metals, silver, gold, and everything hasn't helped. I feel like a bunch of investors abandoned copper after a couple good runs in there. Um, and I think that we're starting to see probably one factor that I didn't anticipate, or I haven't seen usually, is that China, Asia in general, has been a lot more aggressive buying lately than they used to. Uh, Two components to that is you usually go into this Chinese holiday just trying to kind of size the market up. They came back way more aggressive than I anticipated, especially that overall inventories of Kato into both the COMEX warehouse and the LME warehouse continued to grow. That in itself usually tells you that demand is slowing down, but yet the Asian market continues to pretty much outrun both the domestic and the European market today.
Do you think, I mean, with like we're sitting at say 580 COMEX today, which is pretty much the same 580 LME, do you think that the Chinese are more aggressive because it's not 650? Like that 580 is a little more appetizing for them on the buy side than when the market's 630, 640 and really pushing? Because I feel like, in our past conversations, you've said that's when they tend to back off a little bit. And so with the market kind of coming down and living in that between 570 to 590 range, does that now create a little bit more aggression on their side, on the buy side, timing being a part of it with the new year, but also just the overall pricing structure?
Yeah, I think that it does actually. I think that overall the market hasn't really found support at $6. I think my opinion, it was all driven by the speculators. But every time we seem to ratchet up $6 immediately, the next 2 days, the speculators are taking profits and running away. China also, because they buy U.S. currency to trade, right? I mean, we have seen a lot of changes in the U.S. currency, so I think that they're taking advantage of that arbitrage happening right now. And I think that there might be a semi-political component to this, that they're probably getting more aggressive just because of the uncertainty on the global scale regarding stuff that nobody can predict. But there's a little bit of playing defense for China on that part. I think that's what's driving a little bit of this resurgence of the Asian market.
So when you say, because when you talk about currency, obviously since the Iran war started, right, or since we decided it was time to drop some bombs on them, that has really driven the strength of the dollar up, right? So that has played a role on the PGM side, gold and silver for sure, but also I think people weren't really anticipating it to drop the price of copper, but it actually kind of moved the price of copper down. And then now we're starting to kind of see it rebalance around that. It feels like there's a lot of support around that 580 mark, right? You see it move down a little bit and then it kind of gets back to 580. It moves up a little bit and then it kind of gets back to that 580. It feels like that is the point where everybody feels, at least as of late, the last week or two of that new normal, right? 580 feels, kind of a
Yeah, no,
sweet
it's
spot.
actually funny because the average of literally or 3 current months is 586.
Yeah.
uh, so it's really has not diverged on an average basis much from there. I think that that's kind of like a sweet spot where they're finding support for copper at this point. Yeah, I mean, currency, the US dollar goes up, so they need more dollars to buy, and trade commodities, so it gets a little bit more expensive for them. So that put a lot of some pressure into copper, I think, and but it's been a struggle for copper to really reach $6 and really stay there. It just hasn't happened for the absence of a couple of days here and there in late February, but you know.
Do you anticipate, I mean, this is just a wild guess, but do you anticipate if for some reason they can come to some sort of agreement with Iran and kind of cool the tension down in the Middle East, that bringing the dollar maybe back down a little bit and then getting another, maybe some more upside to copper? Or do you feel like the longer this thing stretches on, that creates more pressure on China, more pressure on the Chinese US relationship, and then that really is kind of a big headwind for copper moving forward?
I don't think, I mean, here's the thing with the Middle East, right? So from a consumer standpoint, the Middle East only consumes 5.6% of global copper, okay? Very minimal overall, right? China is still to be the big gorilla when it comes to copper. But a couple of things out of China, they just announced that they're projecting, economic growth at 4.5% of their economy, which is the lowest percentage growth that they have had since 1991,
I was saying
right?
35 years, right? Like it was kind of what they
Yeah.
anticipated.
So, yeah. So, and now, China can release all the statistics that they want and provide some security to those numbers if they happen or not. But just the fact that they're actually acknowledging that their economy is not going to grow as much from a copper demand standpoint, I mean, that will tell you that if you're guy who is the consumer that is consuming, 2/3 of the copper demand is saying, hey, our industry is not doing as well. We're not going to consume as much. Overall, I think that the short-term outlook for copper specific to China, I don't think is going to be very aggressive at all.
So you mean you're flat at best, right? And then any sort of hiccups in the market probably puts downside pressure on it because if your biggest consumer, which for all intents and purposes, so people know, 4.5% or 5% GDP growth or whatever is still a monster number when you're talking about an economy the size of and the consumption volumes that China is puts forward, right? But
Oh
if
yeah.
China, if China's if they're 40, what do we say, 40% of the world's copper consumption on a minimum,
Mm-hmm.
but 40%, and you're still growing at a 4 to 5% clip. You're
Oh
still
yeah.
growing, and that's still, that there's still a significant volume of consumption,
Oh yeah.
and
Oh
that's
yeah. Certainly.
including the U.S. Like if the U.S. grows, like some people are anticipating like a 4 or 5 or even a 6 print, then man, you could maybe see some of that domestic strength follow through as well.
Yeah, there's definitely some strains on the domestic market, especially because we are getting a couple new secondary refineries processing capability being added to the U.S. Uh, there is plans that if everything goes well, they should be up and running for summer, late summer into late on the year. So that mainly helps consumers from the East Coast or Chicago going east. but that's certainly going to put a little bit of pressure on the price of copper because once you get a furnace, copper furnace, you got to feed the baby, right?
Yes.
So you can't stop it in the middle of the day and say, I'll get back to you tomorrow. So those are substantial additions on the capacity side, and I think that that's certainly going to help, to be more accurate. I mean, that's probably more related to, Southeast or East Coast specifically, but the dynamic for the US is still there, right?
Yeah, especially if we can hit some of these growth numbers that we've been hearing touted. And then I was reading an article this morning, and they were saying, they expect a strong second half, right, in the United States from a growth, so whether that comes true or not, I guess, who knows what to predict anymore. But assuming, that is the case, I think that there is some domestic support to the copper market, but we still need China to be a player in that. When you're consuming that much of it, you still need those guys to continue that consumption, or the deal does fall apart very quickly, pricing.
Yeah, no, and I mean it's on the export market. China drives everything, right? I mean, everybody, everybody kind of follows, China's, footing, and right now, we'll see going into the summer what their consumption needs are, because that will, they essentially buy 6 months out, so whatever they're buying is for their projection towards later on the year right now.
Mm-hmm.
And so it's going to be interesting to see where their appetite goes here in the next 3 months, just to see how they think that their year is shaping up for them.
But you're still seeing like an aggressive buying stance. Like you're still seeing that them wanting material, especially at today's price, right?
Oh yeah, I mean, just talking a little bit of spreads. I mean, the domestic discounts for like Bear Bright are between 20 and 25 on the domestic side. And I mean, China has been buying between 15 and 18 under. I mean, that's, $1,200, $2,000 per container different. That makes a lot of difference. Yeah.
Oh yeah. Yeah. I mean, in a 15, 20 or 20, 25, I mean, I know like what the domestic chop numbers are, and it's still wider than that, right? So that tells me that if this market, that they're basically, in my opinion, if you keep your spreads that wide, then you feel like there's still some upside potential to the market, right? Now, if you start tightening them down, I feel like then they feel like the market's either at equilibrium, or there could still be some downside to the market.
Yeah, I mean, the domestic guys are taking contracts, right? But they're certainly not taking as much as people would like to supply to them.
Yeah.
So we're still that and die dynamic. And I think that a lot of that is just driven that they are trying to also get clarity about demand horizon for them. So they don't want to go too far out as they used to do before. I remember back in the days when I used to trade, large contracts with like Korea, and we will do literally like a 6-month contract of prior month average kind of situation. And now they're not willing to take that kind of contract. I mean, if they entertain this is 2 months and maybe 3 months, grudgingly. But back in the days, I mean, they will be asking for a yearly contract, which, I usually don't advise against that kind of stuff.
Well, and the cost of hedging has gone up too, right? I think that people don't have to take that into consideration, or they do need to understand that when you sell to, say, a chop buying facility, or you sell it to somebody that's a true smelter manufacturer or refiner, like those guys they all employ their own hedge books, or like outside hedge books, and nothing's free, right? It costs them money to hedge. And I think in the last couple of years, because of the volatility, the cost of hedging, copper units has I don't know what the percentage of, somebody was telling me the other day, but it's significantly gone up. So you're also paying for that hedge in your sell price. And I don't know that a lot of people know that. I mean, you think you're getting a good deal because you're allowed to hedge, and you are, potentially, depends on the consumer, but you're also paying for that hedge.
Oh yeah. Yeah. I mean, we deal with that because we buy for the refiner in Europe on recovery basis, right? I mean, and if you are thinking that you're going to deliver 95 and you deliver 90, it doesn't sound like much, right? But 5% over 20 tons is, you still have a ton out there that you owe. And if the COMEX, if the LME is 13,000, you're still on the hook for $6,000 on that one container because we took a hedge against that position, right?
Yeah.
So it starts adding up so quickly. It's just mind-boggling.
And when it starts adding up that quickly, then like we discussed last month, there becomes less buyers, less people willing to take positions just because it's just too expensive to do the business.
Yeah.
Um,
And
unless
I'm starting to see a
especially,
little bit more of that actually out of India. I was just this morning with a couple Indian consumers that are literally getting out of the high grade copper buying on India.
yeah.
They still in the yellow brass and brasses and all that stuff, but number two, it's not as strong of an appetite for them just from a financial standpoint. It has gotten so expensive.
Well, and it's not to say that India isn't still trying to bring copper in. It's just saying there's less players that are willing to play the game, which then, it's like anything, less players, margins start to widen out a little bit. So you have to anticipate that.
Yeah, I mean, and that's a very when I did a presentation at the roundtables in Chicago a couple of years ago, Goldman Sachs was projecting that the pound of copper was going to hit like 750, right?
Yeah.
And one of the things that I really brought up is like, who wants to be a trading house or a broker at 750 a pound, right? And the answer is not many people. I mean,
Yeah.
not many people.
Well, and I think that, I mean, is if the cost of everything is going up at that point, I mean, you might find a little bit of love, but like you said, the less people want to do that, then all of a sudden your margins are widening out, and it's which goes back to I always say, like, I preach it, like the small and medium sized guys have good homes have good outlets for your material. Whether you're selling to a broker, whether you're selling to a direct consumer, just have good relationships, have good homes because those will be invaluable when the market gets, significantly stronger or weaker. I mean, that's the other side. We're talking about the upside of copper going to say $7. What happens if it goes to three? You think there's less people interested, when it goes to seven. When it goes to three, all of a
Yeah.
sudden you got a lot of people out there that are not
At,
as nearly as interested.
at $6 copper, just from a financing standpoint, at 8%, it costs $60 per day just to finance it, not to make profit, right?
Yeah.
That's $60 per day every day of the year, right? So if somebody has a transit time to Europe or China or India of 30, 45 days, I mean, you do the math just on financing costs and the risk, right?
Yeah. And somebody's paying for that, right? It's
Absolutely.
usually you on the sell side,
Of course, somebody has to pay for it.
Yeah,
Sometimes
somebody.
you know what that number is, and a lot of times you don't. Right?
Yeah, I heard it said one time, and I say it all the time, but this bus don't run on love, right? It runs on gas
Yeah.
money. So you got to have gas to run the bus. So real quick, we'll let everybody go. What do you think? I mean, what does March look like? Looking in your crystal ball, how do you think? What do you think? Copper, and I'm not asking you to make a prediction on price. Is there more headwinds, more tailwinds? Um, where do you think we stand?
I think that we got more tailwinds going into this month just because of the uncertainty in the context of these issues on a global scale. We like it or not. I mean, people, the stock market is not the economy, but let's face it, it drives a lot of the news and the sentiment overall. And I
Yeah,
think that companies get, just feed more uncertainty on their horizons about. So I anticipate that this month is more of a headwinds than anything else.
gotcha. So you feel like there's more, challenges facing copper pricing, or you think tailwinds? Like you think it's up from today or down?
I see no indication that we're finding support of $6 out there. And I was just talking with somebody today. I say, if you can buy it, sell it, and forget it, that's probably that's what I would do.
Yeah.
And these on these choppy, uncertain things, I mean, you can drive yourself crazy trying to pinpoint the market.
And that's all I'm asking you. What would you do if it was your money? That's everybody else. It's your money. You do it how you want. And the only question I ask is, what would you do if it was yours?
Yeah. Yep. Yeah. Buy, sell, and forget about it. Move on to the
Move
next
the
one.
material. I
Yep.
agree. I'm the same way. Well, I appreciate you taking the time once again. Hopefully next month when we talk, the world will be a calmer place, a little less geopolitical, but I highly doubt it, just because of what's all going on out there today. So hopefully, cross your fingers, we'll have a little more clarity. But we buy, we sell. That's what we do.
That's all we can do. That's all we can control, right? I mean, that's
Exactly.
the part that manage what you can control, and then the other stuff is the other stuff.
Yes, sir. Well, I look forward to our next conversation. It'll actually be before we go to Rima, right? So I'll see you out in Vegas, and anybody else that I remind you, if you have copper to sell or anything scrap wise, aluminum that you're looking to move or you're having a hard time identifying homes, look for Aldo out in Vegas. Him and his guys and gals would love to give you some help and see if they can help you trade some of your materials.
Sure. We
Thanks for
always.
taking the time, sir.
You're welcome, sir. Take care.
All right, talk to you.